Yeah, I would like to ask you something. Is that then you talk about the regulation of the banking system, but also I think that there has been a problem concerning the regulation of other actors, like for instance, the derivatives market. I think all this problem that you have mentioned, that now there are so sophisticated products for which there is no market, what Gordon says. I think that has been a problem there because of lack of regulation, and also the regulation of other actors, like for instance, rating agencies. I mean, until recently, all the assets most of the assets that now are into trouble had the AAA qualification. Also, the monolines that are repackaging all these assets. So, is this a problem also? And I think that, and do you think that in the future this is something that should be addressed, or no, or we should leave the market?
No, I think you're perfectly right. The extension of the safety net I was referring to concerns as well the rescue of AIG, right? And that was indeed a very good move, because all CDS counterparties, AIG had something like 50% of its business in the credit default swap. So its failure would have been worse than Lehman Brothers even. So it's clear that it has to be, it's part of the systemic risk, but it's non-bank, right? So we have a problem with the borders of banking limitation, banking regulation, as you well said. And indeed, this has to be regulated. Credit rating agencies, we have to understand what is their role in the economy. So we have a paper on that, and every other day I find someone that has a paper on that as well. And so I think it's very important. And then OTC markets for derivatives were supposed to create to be less costly for banks, but then when you don't have liquidity, of course, it creates a systemic risk, which you don't have if you have well-organized markets for derivatives. So definitely, this is a key point. Thanks.
Okay. Thank you very much. Now I think that Jordi would like to say something.
Just a very quick comment. You mentioned the lax monetary policy over these years as one source of, or one of the possible sources of the financial imbalances, the housing bubble, and so on. But I just want to, and this is an argument that is often made, and I'm sympathetic with it, actually. But I just want to point out that this argument that is made by the bulk of the business and policy community now stands in clear contradiction with the kind of pressures that the ECB has faced throughout these years. I mean, since the period of low interest rates, which is roughly 2002, 2005, you will not see a single instance in which representatives of the business community or political leaders and so on would put pressure on the ECB to raise interest rates. Okay, so I think that's important to keep in mind.
The asymmetries are remarkable, and so we had this pressure for mark-to-market when things go fine, but then when it doesn't work, then we have to mark to historical values, right? So.
Actually, one of the conferences organized by the school was the conference by Trichet, where he said if for every 20 times we are asked to increase to lower the interest rates, we are asked once to increase it. No?
Jose also wanted to say something.
Yes, just a small point on the origin of the crisis, because you talk about the subprime, but in fact it could have been in any other place of the whole financial system. When you have 60 billion of CDSs going around, anything could have gone wrong, no? Yeah. Isn't that, because everybody says, subprime, subprime, subprime. Well, it turns out that this time it was subprime, but it could have been any other market. Because the point is the risk premium increases, and that immediately transfers to the rest of the markets.
Definitely.
Okay, so at the end of this session, there will be an opportunity for to ask questions. So we'll give the parole to the floor. So now the next panelist is going to be Jose Garcia Montalvo, and the topic, in a broad sense, that he was supposed to cover is the implications for the Spanish economy of the financial crisis. Spain has at least 3 aspects that are been mentioned as different. One is that the way the labor market works makes it really very sensitive to recession. For instance, today's news is that the unemployment has risen 1% over the total active population. The other feature is that what is called the Spanish model of growth, which is a model based on the construction of residential housing. And the third feature that has been mentioned as special for the Spanish situation is the strength, or the supposed strength, of the bank system. This probably was until the beginning of this week, when the Argentinian crisis exploded, and then there is a contagion to Mexico, Brazil, etc., and now the future of those banks is not so glamorous. So what we have is at least 3 features that make our country different concerning the consequences of the crisis, and about this and other things is what Jose is going to talk now.